Hi guys, welcome back to ASX Market Watch. Thanks for joining me again. I must say it's really good to have you here, and especially because we're checking out all the markets as well. We're checking out the Australian markets, the ASX Top 200, where it might be heading, the Dow Jones in the Americas, the FTSE in Europe, and also the Hang Seng as well, just to get a really full feel for where the world is heading, and also where we might be trading as a result of that, if we were to believe that 3 out of 4 stocks follow the overall market. Well, considering all these stocks make up the indexes that we follow, it really does make sense, doesn't it? But let's get into it. We've got, first of all, the ASX Top 200. And again, thanks for checking it out with me today, guys. It really is good to have you here checking out the markets. So, last week we said, we made a pretty bold call. We made a call of 3,800 for the All Ordinaries, which is fairly similar to the ASX Top 200. They run in fairly similar circles. And this is a daily chart of the ASX Top 200. Now, the reason we made that call was because we had this downward move right here. Now, this started in April 2010. Then we got our 1, 2, 3 or ABC correction. Now, this is it's basically a continuation pattern. I'm not going to go into it this week. I went into it in a lot of detail last week. Now, what we actually had was the market, and it hadn't actually done that yet last week. It did actually do it this week. So we've got our lower peak and lower trough right here. So what has actually happened is that's a trigger for this pattern to be on its way to being complete. As you can see, we've got our ABC here, and it's crossed the downtrend line and it's made a lower peak and a lower trough. Now that's a short-term sell signal on a daily chart, at least for my personal trading. And as you can see, the market is still hovering around that same level. So there's one more thing about this little pattern, guys, and that's what I really want to show you as well. And that is this consolidation. Consolidation usually happens at market highs or market lows. Now, Nicholas Darvas found this out, and if you read his book, How I Made $2 Million in the Stock Market, it's a fantastic book. Seriously, go out and buy it if you have not got it on your bookshelf. It's a great read, way up there with Reminiscences of a Stock Operator by Edwin Lefebvre. Brilliant stuff, a rollicking read as well. But what he found was that the market does tend to consolidate at market highs and at market lows. Now, what we've got here, if I just add a little spice to this chart here, there we go. This blue line is basically our support and resistance. As you can see, it found a lot of support over about 8 months, and this is on the ASX Top 200 again. Now, when it's crossed it, it's become resistance. Now, for you guys who have studied support and resistance, yes, when support is crossed, it becomes resistance. When resistance is crossed, it becomes support. You guys know this, right? Yes, I'm pretty sure you do. And anyway, that's exactly what's happened. But further to that, we've got this little, what some might call a Darvas box, or you can call it a continuation pattern, or you can call it an ABC correction. I don't care what you call it, really. But that's what it is. It's consolidation at the previous lows. Now, it's also coming up to being the 52-week lows. So that's even more gracious again. That's what we're really looking for. Now, Darvas found that when it broke out of this little box-like range, which is what we have, then the market would continue on, and it's a great place to set your entry and your stops. Your stops would be at the bottom or the top of the previous box, depending on which way you're trading. So, that's Darvas. Good old Darvas. He's awesome. 30, 40 years ago, still rocking the markets, seriously, but very simple stuff, guys. The next one, I hope that helps, by the way. The next one is the Dow Jones. Now, it looks like I've been into this chart already because we've got an uptrend line, but also what we have is a downtrend line as well. Really, we've got a lot of sideways action. And last week I did say our 10,000 level is the biggest level support. And that's exactly what's happened. The market hasn't been able to close below it for more than a few days. But further to that, on the Dow Jones, guys, this is the most exciting part about the Dow Jones. If you can see this uptrend line that I've drawn in, it's a long-term uptrend line from the very low. Now, look where the market bounced off it this week. How absolutely fantastic is that? Look at that! And who says trend lines are a simple tool? Seriously, they are the most powerful thing you could possibly ever imagine if you know how to use them correctly. But that's what we've got. The market actually literally bounced off the trend line on Friday and rose 150 to 200 points. So that's the power of trend lines right there. Now, will that be sustainable? Well, who knows? I mean, we've got this massive support at 10,000. That is huge. Now, if it goes below that by too much, so around 9,700, 9,600, we could be in for a bit of trouble as the stops start to get triggered, as margin calls start to get triggered. But we just have to wait and see if that will actually happen, because we've got this sort of head and shoulders top, as we were showing you last week as well. Now, if that breaks out to the downside, that's what could potentially happen. In the meantime, we've got all this sideways action. As you can see, we're hemmed in by two long-term trend lines. Which way will it break out? Whichever way it does break out, that's probably the way that the stock will actually continue trending in. So I hope that helps on the Dow Jones. The next one, that is the FTSE. FTSE is a very similar situation. And as you can see, if I just enlarge that a little bit as well, this is a daily chart still. It did rally again on the same day as the Dow Jones on Friday. So if we check out the FTSE, yes, it is still above its uptrend line in there, but it's also below its longer term downtrend line right here. So again, a lot of sideways action and a lot of support at 5,000. That's the 5,000 point level there. And really, so that's what the market is staying above right now. And again, if it was to go to below it by too much, that could see some margin calls get triggered, some stops get triggered and everything like that. But it hasn't happened yet. Don't anticipate that it necessarily will happen. However, that's something to be mindful of. And in the meantime, it's all sideways action. Now, last but not least, and actually one last thing after the Hang Seng that I really want to show you, is back over history and the sideways movements. This is the Hang Seng just really, really quickly, guys. As you can see, the market has, I think there's a better trend line than that, but this is a rough idea for you. It did bounce off the longer term trend line, and it's heading down now. And what we're looking for is just a lower peak and a lower trough now. So really, it's almost in a short-term downtrend again, the Hang Seng. Very, very close, but it's still on the longer-term basis. This little sideways movement has the potential to break out to the upside, and if it does, it's going to see a great move, because this is a really long-term continuation pattern or consolidation pattern. It hasn't dropped too far off its highs. In all honesty, it's only a few percent, 10 to 15% maybe, but yeah, in the grand scheme of things, it's still consolidating in that sideways range as well, so it has the potential to break out to the upside because it's a bit more of a flatter pattern than the other guys. But that's the Hang Seng. Just really quickly, guys, the Dow Jones over history. This is something that I was looking at over the last couple of days. As you can see, the market now, actually what I might do is just turn it into a weekly pattern. Well, there we go. So that's every bar is 1 week here. Now, looking at this, we've had, because obviously we're looking at a sideways pattern right now. Now look at this. This is massive. This is 3.5 years of sideways action from 2000 to early 2003. It's not the only time this has happened, guys. Seriously. This is from 1980 to 1982. Boom. Sideways action, 2 years. This one, 1978 to 1980. 2 years of sideways action. Bear market for 2 years, 1976 to 1978. Bear market for 2 years, 1973 to 1975. Sideways action again, 1967 to 1969. Slightly upwards though, so you would have been a little bit happy there. Even further back over history, guys. Oh, this is a beautiful one. This one, ignore this little bar here, that's just data. 1946 to 1949, 3 years of sideways action. It definitely is possible, guys. And here's another one, 1937 to 1942, 5 years of sideways to down action. That's not to mention even the October crash in 1929, and then the bear market to 1933. So this stuff happens all the time. That's my point. That's just what I really wanted to get across to you. You guys have to be able to trade long and short, or you have to be able to know when to get out of the market during a bear market, just in case. So that's all I'm going to tell you right now, and as you can see, it happens quite frequently, almost once every 10 years at least, over history, sideways or a downward market. So be ready, be prepared. You have to be able to trade up and down just in case, and that's my warning to you. So yeah, hope that helps on all the markets around the world. Again, it's quite an exciting time to be in the market despite the sideways action. There's always something going on. Hope this has helped you this week, and I really can't wait to check it out next week just to see exactly what's going on again. It'll be great to have you stop by. Other than that, we'll see you then. Alright, bye guys.